Holy jokers, this ain't no smokers. Oil is absolutely out of control. It is out of control. I mean, look at this, guys. Oil just hit 126, and it is showing, it's over 126 now. It's showing no signs of slowing down. This is absolutely incredible. I want to talk about, what this means. We're talking about what this means for a lot of stocks out there. Futures hate this, by the way. Futures are down right now. NASDAQ's down. S&P's down. Everything's down pretty much across the board. And if we go ahead and we look at Brent just cracked 130 plus for Brent now. I mean, for Brent, this is probably the highest it's been in a long time. The last time Brent was this high, you got to go back to March of 2008. And here's the thing. With the way oil's going up right now, it could take out its all-time high within 2 or 3 days. Like, that's the incredible thing. Like, we're getting that close, and these moves are so dramatic right now. A 10% plus move for oil. We're getting so close with these massive moves that literally oil could take out these highs in a matter of a few days. And here's the thing, okay? This doesn't have to slow down anytime soon. And the reason being, essentially, is now we're talking about the U.S. potentially shutting off Russia imports of oil and energy products, right? If that happens, likely the price is going to go up even more. So it's not, I wish I could say today's the top for oil, but that would be a hard thing to even consider, right? So if we think about like who's affected by this, okay? If we talk about stocks I personally have money in, let's think about these for a moment. Tesla. So Tesla, if anything, they're affected positively by all this because every single person basically is saying, I sure need to consider getting an EV for my next car. And the more these oil prices go up, the more gas prices go up, the more and more folks consider, you know what? I got to go ahead and get an EV because gas prices are now over $4 a gallon on average in the United States of America. And that's not slowing down anytime soon. That's going to continue to go up for at least the next few weeks, if not the next several months. A lot of markets are now looking at $5 and over $5. There's some gas stations in LA now hitting $6 plus. Those could be at $7 by the end of this week. Okay. So Tesla's probably actually helped out in this situation. The chef, obviously, there's somebody that transport goods around, right? That hurts them. The only good thing for the chef is that's not a profitable company right now, so no one's looking at them for short-term profitability metrics. That's certainly not why I'm investing in the stock. I'm investing in it because of the massive revenue opportunity over the next 5-10 years for this company. So that's the only good thing when it comes to them. Corsair Gaming, so they're very dependent upon containers, and container shipping costs have started to come down, so that's good news for something like Corsair, but they could be somewhat affected here. Honest could be somewhat affected, but they're not a profitable company as of right now, so no one's really looking at them for short-term profitability. The Planet could be affected if oil gets so high that people cancel trips to Vegas or cancel trips to Orange County. That could be something that negatively affects the Planet. If that was to happen, I mean, that would be a no bueno situation. That would be a no bueno situation if that happened for the Planet. As of right now, I would say oil hasn't gone high enough and gas prices haven't gone high enough for people to cancel Vegas plans. But I mean, shoot, at this rate, if all of a sudden, next thing you know, barrel of oil is 200 plus and gas prices are, let's say, $6-7 on average around the United States of America, with some markets approaching $7-8, I wouldn't put it past some people to say, you know what, I'm not going to go to Vegas this summer or something like that, or the spring. So let's hope for the best there. Smile Direct Club, I wouldn't really call them too affected. They're affected a little bit because obviously they're a consumer company, and think about it for a moment, right? If people have less money to spend out there, Smile Direct Club obviously would be hurt. Vaunt Brands, not too much. Oatly, they're not a profitable company yet, so no one's looking at them for short-term profitability. PayPal, I wouldn't consider them really affected by this. Voyager Digital, same exact thing. Wouldn't consider them affected either. Beyond Meat, not a profitable company, so no one's really looking at them for, if they miss or hit EPS, it literally doesn't even matter for Beyond Meat at this stage of their game. It's all about revenue growth and those sorts of opportunities. Dropbox, not really affected. It's a cloud company, e-signing documents, things like that. That doesn't really matter for them. Revolve, it could hurt a little bit. Obviously shipping costs could be going up for all the big, shippers out there. They could be hedged a bit. They could have contracts that, kind of have hedged themselves a bit. So I think it could negatively affect RVLV, but not in insane amount. Skyworks Solutions is very dependent upon how iPhone sells and Apple products. So as long as those products continue to move, it doesn't really matter for Skyworks. They're not very affected by that. Elf Beauty, if anything, they benefit from this if people have less money to spend, right? Well, Elf benefits from that. They're the products they sell are very, very cheap, and the quality of their cosmetics products are very, very high. The standards for their products are very, very high. So if anything, Elf could actually benefit. Meta, this doesn't really, help or hurt Meta in this situation. Well, I can make an argument that maybe it helps if gas prices really start to consider, going up. Well, and remember we talked about like if people, cancel vacations or going places and doing stuff, right? Well, if that's the situation, then you're going to spend more time online. It's not like people just sit down in a chair and just look at the ceiling or something like that. It's not what happens. So people, next thing you know, they're on the smartphones a lot more. They're using Facebook, Instagram, things like that. So if anything, they could actually be helped in this situation. Foot Locker would be, I would say, hurt in this situation. The shipping of products, it would likely make prices go up for them. That would not be good. Nordstrom, same exact situation. WBA could actually be helped a little bit. Their convenience side, there's WBA in every corner. So if you're thinking about, I don't see them being hurt in that situation. Pfizer, they're not really hurt in that situation. Qualcomm, they're not hurt in that situation. JP Morgan, they're not really hurt. Wynn could be affected if these prices continue to skyrocket and it got to such a level that people started to literally cancel vacations or didn't want to come. The good news is for Wynn, and the reason they wouldn't be affected as much, is Wynn's dealing with the type of consumers that they don't care if gas is $7 or $4. They don't care if their flight's an extra $300 or $500. They're probably flying in on private jets anyways. Or the type of people that, have millions of dollars or tens of millions or, hundreds of millions of dollars. That's Wynn's core clientele. That's who moves the numbers for them. So they're not nearly as affected as somebody like the Planet would, that they're, they really do business with like mass market at the end of the day, right? So that's the one good thing I'll say about somebody like a Wynn. Tapestry, a little affected, kind of like a JWN and a Foot Locker would be. Very good food company. That is such a mess. They need to just, figure out their business before they worry about anything oil related. Okay. Now, if we look at the stocks I'm watching, but I don't currently own, and we think about these for a moment, Amazon negatively affected. Yes, absolutely. Think about the transportation of everything. It's Amazon. I mean, Amazon's the transportation of everything. And obviously Amazon's already kind of getting hit with labor costs moving up right now. So that'd be something that negatively affects Amazon a bit. Palantir, not so much. Not so much for Palantir. Purple, PRPL, yes, absolutely. They're another, company that relies on transport of goods and mattresses and things like that. So they would be negatively affected. Teladoc, definitely not. If anything, helped in this situation. Virtual healthcare just continues to be a booming industry and will be for the next decades. Like that's not like that's a slowing down thing or something like that, right? So Teladoc, if anything, they're benefiting because maybe people don't want to drive all the way to the doctor and they want to just get virtual healthcare. So Teladoc would benefit. Uber. So Uber's a conflicting one because Uber, you think about transportation, you think about Uber Eats, you think about their traditional rideshare business, right? But the thing with Uber is they don't have to come out of pocket. They're not paying the fuel cost of any of their drivers. That's not the way it works with Uber, right? And so at the end of the day, if let's say we're in a situation where oil continues to go up, gas prices continue to go up. Well, the driver ultimately is hit on that. And so what the driver ends up pushing back and saying, Uber, you got to raise price. So Uber ends up just raising prices. They're not actually directly hit in any meaningful way. If anybody has to take the hit short term, unfortunately, it falls on the little guys that are the Uber drivers at the end of the day. And they push back against Uber and they say, you guys got to raise prices or we're not, giving these rides out there. And then Uber has to say, okay, we're raising the prices essentially. Okay. So Uber, although it might seem like they'd be directly hit, they actually wouldn't be directly hit. They're actually in a pretty good spot, believe it or not. Okay. Something like Square, I wouldn't call them somebody that's affected by oil prices going up. SoFi, same exact situation. Wouldn't call them one that's affected. Shopify, not really. That's not the way their business model works. They're providing the stores. They're not like an Amazon that's trying to be everything and have fulfillment centers and driving the packages to your home and stuff like that, right? That's not Shopify. So Shopify actually is in a much stronger position in a situation like this than somebody like an Amazon would. Amazon's done such a great job of building their business model out across the board, so they're just a behemoth that they just got everything covered. Well, in doing that, you also run the downside of, in times like this, when you got this massive workforce behind you that, labor just continues to rise, and you're transporting packages all over the United States of America. And, I'm sure a lot of their fleet still at the end of the day is using traditional fossil fuels. Some of it's not, but a lot of it is. And so somebody like Amazon's absolutely, negatively affected. Somebody like Shopify, not really so much. Stitch Fix, a little bit, definitely a little bit, but Stitch Fix is a company that's been flirting with profitability than non-profitability. So, it's another one of those that if you're thinking about, because when you're thinking about oil prices going up a bunch, right? Gas prices going up, you're thinking about companies might miss earnings, right? They might miss their net income numbers. They might miss their ultimate EPS numbers, earnings per share, which is what Wall Street really pays attention to on a high level. They couldn't even miss gross margins, let's say, for instance, right? Or, net margin maybe. And so those are sorts of metrics that are more important for companies that are consistently profitable businesses, because that's what everybody looks at for those. The slower growth companies, for a lot of these, they just don't fall in that category. Sam, absolutely, they're hurt in a situation like this. Sam has enough negative stuff going for them, but unfortunately, Sam is, the maker of Boston. They're the Boston Beer Company, so they make, like Sam Adams and those sorts of beers. And a lot of transportation of their products all over the place, and they're going to end up taking hits on that at the end of the day, right? Fubo TV definitely not affected negatively by this. So there, nothing wrong there. The Hood, as far as Robinhood goes, no. If anything, all this volatility in the market might actually end up helping them out a bit. And they need all the help they can get because their comps they have to comp against this the quarter we're in right now and next quarter are ridiculous. So the only good news is I think all this volatility might make some folks want to trade maybe a little more often and do a little more option moves. All this volatility gets people going, and that's good for Robinhood. Lemonade, no, I would definitely not call them negatively affected. If anything, they're positively affected by this. Lemonade is seen as a company that can potentially save you money when it comes to your insurance, and using artificial intelligence in programs to kind of understand, how much they should charge you and things like that. So Lemonade could actually be helped in this, where people are thinking about money a little more often. GoodRx, also another one that could be helped in this situation. That stock's fallen dramatically recently, but when it comes to GoodRx, there's a company I look at and I say, if we're in a situation where consumers have less money because oil's going up so much and their gas price is going up so much, they're much more likely to use a service like GoodRx that will save you money on your pharmaceuticals, right? MU, not too much. Not too much when it comes to MU, the biggest memory chip maker out there. I mean, maybe a little bit, but not in a major way when it comes to MU getting hit there, okay? Atomera, they're like a pre-revenue company, so they're not really there. Eli, Eli, I think about maybe a little bit because they do own Topgolf now. And if these gas prices continue to rise and the consumer has to pull back for a short amount of time, that could maybe hurt something like Topgolf's numbers, right? Which Topgolf is dependent upon the masses going out there and wanting to go have a good time, right? And, have some beers and hit some golf balls and have fun and things like that. So maybe a little bit. Their traditional business, a teeny bit, but not very much. Upwork, definitely not. If anything, they're helped. They're obviously, think about them as a freelancing economy, the freelance work. Upwork, if anything, they're helped in a situation like this. Switch, no, not really. Data center company, they're not really hurt by oil prices going up so much. Cruisy Doozy, not really. Berkshire Hathaway, yes, there's definitely several businesses of Berkshire Hathaway that would be negatively affected. But Berkshire does usually own some oil companies as well, so that will offset. Also, Berkshire Hathaway owns one of the biggest rail companies in the world in Burlington, Northern Santa Fe. So that could be seen as a help in this sort of environment where maybe some companies don't consider trucking as much and want to go rail. So Berkshire's, if you study enough about Berkshire, you realize they're almost hedged across everything. It's amazing what kind of Buffett's built there over time, where their company is so diversified now that almost everything that happens, they're helped and then they're hurt at the same time, but it ends up just kind of offsetting. Sometimes they do a little better in a certain situation or a little worse, but they're hedged. They're just a hedged play, okay? Caterpillar, not really too much. I mean, a little bit. But they'll just pass up the cost to their customers at the end of the day. When it comes to somebody like a cat, I mean, we're talking about that's moving massive stuff around, and so any sort of short-term effects that are happening in their business, they'll easily pass that along to their customers. There's not a ton of competition in that space, and at the end of the day, if you're buying a $200,000 machine, you're going to get that extra cost passed along to you if there is any extra cost that's incurred there. UPS, yes, definitely. If I think about one of the companies that will be hurt the most, UPS, absolutely. Now, UPS does some sophisticated things with hedging, future prices, and things like that, but still, even with hedging of prices, I can tell you, UPS will take hits in this. UPS will take hits. FedEx will take hits. Those companies will be negatively affected. And if you're thinking about some companies that could potentially miss EPS numbers in the next quarter or two, unfortunately, it could be UPS and it could be FedEx. And don't be surprised if they issue some, if oil prices continue to go up, if gas prices continue to go up, do not be surprised at all if UPS comes out and issues maybe some warnings around EPS. I could definitely see that happening in somebody like a FedEx as well. Any of those sorts of companies, yeah, there's they're gonna take short-term hits. There's no doubt about it. Okay, something like Google, no, not one that's negatively affected there. YouTube, Google, Pixel phones and stuff like that. No, Android, they're good as far as all that goes. Okay, so when you're looking at oil price going absolutely parabolic and gas prices going parabolic and all those sorts of things, I think there's a few things to think about. The first is, how long does this last? So in my opinion, it could last maybe a few more weeks to maybe a few more months. Do I see this playing out where prices skyrocket for like a year into the future, 2 years in the future? Not really. I can tell you everybody's going to do everything possible to, get drilling. Let's just call it that. Fracking, whatever it takes. Believe me, there will be, all restrictions will end up being removed, and there's going to be full on. But what I will say about that is, it takes sometimes several months to get production much more flowing. Let's call it that. And so this is something that in the short term, there's no magic fix really for the supply situation in the oil market. And think about the big players in this market. Like, think about OPEC. Do you think OPEC's necessarily in a rush to increase supply massively right now? No, probably not, because they're loving this. They're making so much money. When you got to understand, what it costs to produce a barrel of oil in the Middle East. Oh my gosh, they love this. They love this with a passion. This is beautiful for them. They're making so much money. It's disgusting right now. And why are they incentivized to? Russia is potentially being taken out of this whole situation. So that's a competitor of theirs who's being taken out. So now they have even less competition. And in terms of the U.S. players, it's going to take them, at least a few months, if not 6 months, 12 months to really get, things up and rolling the way that they need to get it up and rolling. So OPEC's in a situation to kind of sitting back and looking and like, man, we're making so much money and there's really no need for us to come. Why is OPEC going to run to save the day and say, oh, we're gonna magically increase supply? They're not going to do that. So that's where you get into this ugly situation in the short term where oil just continues to skyrocket. And basically how things are working right now in the stock market is the more oil skyrockets up, the more the market goes down right now, because the market starts to get scared about earnings being missed. Oil prices going up so much, gas prices going up so much, it hurts the overall economy, and it brings down companies' earnings and revenue estimates and all those sorts of things. So right now, almost every day when you see oil going up, you see the market going down. Usually how it works is if oil goes up over time, the stock market goes up over time. And if oil's going down, usually the stock market's going down. They kind of work together most of the time. But right now is not that situation. Oil spikes, market down huge. Market up huge, oil spikes down. But really the markets right now are dependent upon oil, which is crazy. And so the market's just getting like I said, the market's getting everything thrown at it right now. You got inflation thrown at it, which is still going on, and with gas prices going up, inflation's probably going to get even worse. The Fed's been thrown at it. Here's the thing. The Fed's not going to magically be able to fix oil price. By the Fed raising rates, that's not going to mean oil goes to $80 tomorrow. That's not the way this works. And so the Fed can't have a magic pill to be, put out there. Russia's situation obviously is a huge negative for the market. Now you got oil price. The market, like I said, we got this massive wall of worry just in front of us right now. that it's just going to take a while to kind of break these bricks down. It's going to happen, but, we got a massive wall of worry, and we're going to have to destroy these things brick by brick over the coming, 6, 12 months, and eventually the sun's going to come out. But right now, it's just we're getting everything thrown at us, and that's just the way it is in this sort of market right now. So anyways, guys, I'm going to keep you up to date, obviously, on everything going on in the markets, oil markets, things like that. Hope you guys enjoyed this video. Much love, and have a great day. Don't forget to subscribe.